Right, traders, I'm resuming the video as I'm going to take my first trade for the day. I'm going to use limit order and I'm going to take a failed second entry short because the bias is bullish and both of these uptrends need to get new extreme. I'm just waiting for prices to pull back with the limit order a little bit back so I can enter. I'm going with 4 contracts. I'm still going to go for bigger target because the ATR increased. So I'm going with 4 contracts only because the momentum has increased. We had news here. Prices cooled off a little bit, but the bars are quite big, so I'm scaling down. But I see new low, first attempt, and we got out. So I'm gonna quickly tighten the runner because anything is just a bonus. And I'm entering this trade because this was a new low, first entry short pullback, second entry short failure. This uptrend needs to get new extreme, and this short-term uptrend needs to get new extreme as well. So all the bias is bullish. This is a high probability setup, new low, first entry short pullback, second entry short. So I'm going to quickly mark it as our first trade for the day. This was a big bullish bar indicating decent momentum. I went for 10 ticks. You guys can see I expected for bias to be still bullish, and we can actually get even a second entry long here as a high probability setup to still look for new extreme. All right, so I'm resuming the video as we have second entry long, but the signal bar didn't really finish well. So for that reason, I'm skipping this entry because I see stim at the top. The signal bar was quite neutral, which is quite a good decision because we would have gotten stopped out here. But this was a tempting setup to take because the 2-legged pullback, exponential moving average kept holding, and uptrends, both uptrends need to get new extreme. We'll see what can happen. This may have just been a little bit of a fake out. But overall structure is a trailing range. We had news announcement here, which you can see big volatility spike. And at this point on, these uptrends need to get new high. We're at the upper tier of a trailing range. So we'll see what can happen here. Second entry long ended up failing just by a couple ticks, and notice follow up big bullish bar. Now this is what it's called a double trap. Now double trap can form if there's something wrong with the second entry. Either the shortened downtrend is in play, or the setup is too congested, or the signal bar is not great. And you can see respecting the signal bar here saved me because context wise this is a great setup, and notice just stopped all the early bulls out and then form big bullish bar. Now why this is a double trap? Because all the early buyers are going to get trapped, and all the early sellers thinking that there is new high, first entry long, second entry long failure, they're going to get trapped as well. We take 1 tick lower or a couple ticks lower, we instantly reverse up, and the exponential moving average, the key entry point, kept holding prices. So you can see still this bullish trend needed new extreme, and even this supportive trend, the short-term uptrend, needed new extreme. So this is why I like taking the failed second entry short, trapping all the traders, picking top on the second entry short. Exponential moving average keeps holding prices, and also notice you also have small support here showing you signs that the sellers are really struggling to push lower. So all the bias in this market following price action is bullish. Setup was extremely big. It was 8 point. We are in overall trailing structure, so we expect some pullback at least to test the key level. The stock market opened and we can see that the prices are correcting quite strongly. So notice prices broke this important key level but never tested it. So there is a high chance that prices may come back and test this important breakout area, as prices generally will do. So in this situation, while uptrend needs to get new extreme, I'm going to observe how the exponential moving average is going to react, because there is a likelihood we're going to create 2 large legs down to test this key level before prices attempt to create new extreme. And notice we had another high probability setup, 2-legged pullback, second entry long at 3 key entry points. It was also breakout pullback out of this consolidation, which is a smaller trading range, second entry long, EMA, nicely fitting a trend line, and a breakout pullback pattern and great signal bar. So this was a good high probability setup that I didn't manage to get. All right, you can see perfect price action rules. A lot of times these breakout areas will really get tested because there was a quick spike and prices need to come back and put the market into equilibrium. Now you can see there was a spike and a channel formation, which I didn't identify earlier. I played a wider channel, but notice we have a big spike and then bars are slowly sloping lower, which creates the second entry short as a decent setup. Now, I unfortunately had to break a new extreme because I played the different trend line. But if you can find a spike and a channel early, this is a nice second entry short because the downtrend needs to get new extreme and we still need to test this important key level. So we'll see how the key level will react. This will be important because if we push above EMA and get a failed second entry short, there's a chance for us creating a new extreme. Or if we push below EMA, then we're going to adapt to trailing range rules. So we are drawing these important key levels to make sense of what the price action is doing. There's a nice second entry short and key level is right now being tested. The key level didn't hold at all, which is indicating lack of bullish momentum. Strong bearish push below EMA, which means I need to extend the downtrend to better adjust to market structure. We have a new extreme, first attempt to sell, and I was expecting to take a high probability setup, same pattern as here, second entry short, because that is a high probability setup. But you can see we only managed to push lower already on the first entry short. So nothing I can do. I can't really pick a setup here. I'm just watching the structure go down at this point on. Downtrend had a break. We created new extreme following the trendline rule. After new extreme, we expect correction or possible reversal, and notice strong push above EMA indicating a bullish short-term reversal. There was no second entry short close to EMA. We had a two-legged pullback far away from EMA, followed by a new high, first entry long, second entry long failure. With second entry long against the main trend, which is down, is going to be a trap. The gut feeling is telling you want to go short here, but it's really far away from EMA, so you pretty much have to respect the rules. But notice the key entry point, how it's nicely confirming it even after break. Notice how prices are sloping lower down. So for that reason, this was very tempting. But now we have a break new extreme and we have a brand new uptrend to the upside. So notice most breakouts will fail. This was the main trading range. Prices come back, test the breakout area, and now we have a break new low and prices are reversing. Right, so I'm about to enter a visual second entry long double trap, new high, first entry long, pullback, visual second entry long. We had a second entry long here, so this is going to be technically a double trap. I'm going to chase it just a little bit. Come on. Great setup. And that's a shame because this was a textbook visual two-legged pullback. Notice I extended the channel even a little bit more because there was strong bullish momentum, more confirmations of the highs, break. I expected for prices to create new extreme. We had a new high, first entry long, pullback, second entry long, far away from EMA, above bearish bar. So when it's forming far away from EMA, above bad bar, there can be a double trap. And in this instance, double trap was also, notice visual, two-legged pullback. First leg down, pullback, second leg down. So this right here is textbook high probability setup. This is the setup that you want to study. Simple context, EMA key entry point keeps holding. Downtrend played out with the break new low. Looks visually like a two-legged pullback. Great tier 1 signal bar, and the uptrend created new extreme. So pretty much perfect setup. I'm a little bit frustrated I missed it, but it can happen. This was really the greatest setup, easiest setup for the day. I'm just going to market. This was a great textbook signal bar. Hopefully you understand the context, and pretty much you're looking for the same thing all the way down. You're looking for these two-legged pullbacks while the downtrend is in play at the key entry point. And notice you're looking for two-legged pullbacks. This is where the high probability setup appear. Notice you don't want to take first entry long at the highs because you can get stopped. But this two-legged pullback, visual one, that can produce a large good momentum. Right, traders, so we have a lot to talk about because notice I'm extending the channel, but let's say we're playing this uptrend with the break new extreme. Notice what the prices are doing. We are entering consolidation, and this key level, the high of the day that you identified early during your pre-market session, you can see it is coming into play again, indicating consolidation structure. EMA keeps holding, so this is a bullish structure. We have a break new high. We're not looking for reversal, but there was no reversal pattern, felt second entry long anyway. Notice what happened. This is a consolidation. According to price action rules, most breakouts will fail. So we have a failed breakout. Look at this big bearish bar. Prices pull back into a trend range, and you have a new low, first entry short, pull back, second entry short, failure, above EMA, above this important key level. And also you can extend the channel a little bit because you have more confirmation of the bullish momentum, because you can see prices are failing to push below. This key level is holding. So this was a decent setup, very nice. I almost took it. What stopped me from taking this was the middle of trend range action. Can be a little bit risky, but you can see when the context is really strong and really on your side, you're coming after a failed breakout and it's so bullish, two key entry points are holding. This is a failed second entry short trap, and this can be a good setup as well. So right now, a couple of very easy setups. We didn't get filled here, and I hesitated a little bit here, but you can see price action working like clockwork today. Right, so I'm resuming the video as I'm going to take failed second entry short with a target profit of 10 ticks. Because I'm looking at new low, first entry short pullback, second entry short failure. The bar managed to close at the level of EMA. This is why I'm taking this setup. Had it close below, I'm not interested. We have a very nice bullish bar, tier 1 signal bar. This option needs to get new high, and this is a new low, first entry short pullback, second entry short. This is the second attempt for prices to create new low for this downtrend. So I expect for prices to create new high because this bullish bias is the stronger one, and this is going to most likely take precedence. We need a couple more ticks here. New low, first entry short, second entry short, failure. This big bearish bar probably lured in a lot of short sellers here. Come on, we need a couple more ticks. Going for 10 tick target profit because I decreased number of my contracts. You guys can see if I went for 8, I would have been out. We finally push higher, so I'm going to tighten the stop loss because anything we make right now is just a bonus. because we made our scalp, so the runner is just a bonus at this point on. But you guys can see I'm playing on the bullish bias. If this signal bar was slightly worse, or we close a little bit below EMA, I would not be interested. I only like because at the very last second we managed to close quite strongly at the level of EMA, and this is a failed second entry short, high probability setup. So for that reason I'm liking it, because this downtrend had first attempt to sell, pull back, second attempt to sell. I cannot go long high or low here because this downtrend still needs to get new extreme, but when there is a second attempt to sell, I feel like this is not worth it. Alright traders, so I'm resuming the video as we have quite a strong runner. I'm not going to be greedy. I'm going to trail it really tight because we have a break, move to a new extreme, and anything we make right now is just a bonus, but I'll be very happy taking what we get here because we have quite a big spike. Notice prices are pushing higher, so I'm going to do what I call unrealistic trail. I'm just going to be trailing it as long as the market goes higher and higher without little chance for market to pull back. You guys can see one tick below this will get me out, but I'm locking 10 points worth of a target profit here, and we got out. So prices created a break, new extreme, and right now I expect correction. Look at the bias, it's still quite strong, so I'm not expecting reversal, but I don't want to hold the runner any longer because we managed to squeeze it at the new high according to rules. Alright traders, so this was our first trade for the day, this failed second entry short, and we managed to get another failed second entry short to finish the day. But I'm gonna wrap it up because we managed to get a nice runner here. We had pretty decent price action, a lot of good setups, but right now I'm gonna wrap it up with the break and new extreme. So if you enjoyed the video, if you're at the very end, you're probably enjoying the content, so like the video, subscribe to the channel if you haven't. I'm gonna see you guys in the next one. Take care everybody.